to your team and get them plugged into this call.
Hi guys, it's Brittany Mullally from the National Life Group, and I really appreciate you taking your time to be with me today on Father's Day. I know what an important holiday it is to all of the fathers on the line. There's a lot of sacrifice to do what you do every day to put the food on the table for your family. So I appreciate you taking some of that time to be with me today. And I'm going to just go through some really exciting things about National Life Group. If you've heard of my company, then that's just exciting for me. If you haven't, then that's even more exciting because it's great to introduce you to a company like mine. We are industry leaders and innovators in the life insurance market space. And I just want to kind of go through some things you need to know if you don't already know us, and of course some highlights on things that will really ignite some sales ideas for you, I think, today. First, I want to start by a little bit of our background, a little bit on the company itself, especially for the people on the line who have not yet worked with me. And so what I want to first start with is year-end of 2015 results. Crazy thing to start with because that was 6 months ago at this point, but still it's really important for you to understand the type of company that I represent. We have had 5 historic growth years in a row. We are growing by double digits, and like I said, over 5 years. If you look back on the last 5 years, most of my competitors have stayed relatively flat in this market space. And to say that we have had extensive growth has just been something that we are super proud of as a little tiny company. And so what's really the first number on the screen that you're looking at is actually the life policies in force. So we actually take more pride in having more people covered. So we actually really, each year, we look back to see how many extra people we were able to get put in place with a policy of ours, whether it be a life policy or an annuity. And so we actually had 15% growth in new issued life cases. And that's a number that we are super proud of. And again, that number consistently grows. We want as many people in these policies as humanly possible. And you're going to see why as we go forward. One of the things that I always tell agents is that part of the sales process is being able to actually sell the company. It's really important to sell product. Absolutely, there's no doubt about that. Knowing the product is key. But then you'll have those clients who will say, well, who is this company? Who are these people that I'm giving my hard-earned money to? And so I want to give you some facts to put in your back pocket. A couple of things that are worth noting, especially for consumers. We're the second oldest mutual insurance company in America. Most of our competitors have been bought out or have had to take some of their departments overseas. All of these different things have led to them no longer being mutually held. And that's something that is something we hold strong. We will never change being mutual. We want to stay mutual. But as well, we pride ourselves on the fact that being a mutual company means that our policy owners actually own pieces of our company. And we love that fact. We love being this big, tight-knit family that we are. And because we have this long-standing connection with our policy owners, we are proud to say that we have paid dividends every year since 1855. So in those years when there have been down markets and TARP money was accepted and government assistance was needed and there was no surplus to give clients, National Life Group was still able to look back on our portfolio, see enough growth to give some kind of dividend, meaning that our policy owners never saw a 0 year on a whole life policy. That's really big. Never saw a 0 year. We are among the top 20 life insurance companies. We're actually number 19. And so they kind of look at all of these companies. I think they look at about 45, or they rank about 45 of them. And in terms of sales, we are the 19th top company in the industry. And we are the only company of those 19 to offer accelerated benefit riders and a lifetime income benefit rider. I'm going to talk about both of those going forward. The last number that's super important on here that I just like to hone in on as my favorite is the fact that National Life Group has a 450% risk-based capital. What that means is for every $1 that your client purchases in death benefit, sorry about that, for every $1 your client purchases in death benefit, my company backs by $4.50. $4.50, that's 4.5 times the amount of death benefit they've actually purchased. So that means we are way, way covered when it comes to paying out our death claims, our accelerated benefits, and any of our income requests. That's a really big fact. That's probably the most important fact on this slide. If your clients are investing their money in a company, they want to know that money will always be there. Is that company going to merge? Is that company going to go bankrupt? What will they do with their future earnings? Well, you can feel really safe in knowing that National Life Group takes all of that stuff very seriously and uses a lot of that money to create better, more efficient systems and products. As well, we keep as much in our reserves as humanly possible to create the necessary guarantee for keeping our promises. As I said, we're going to talk about how National Life Group is innovators in the industry. And one of the things that we really lead on, and if you talk to any of my competitors, they will know me best for my accelerated benefit riders. So when we look at our big puzzle, and I'm going to talk a lot about this puzzle, so you guys are going to get really comfortable with it. But when we talk about the puzzle, looking at it alone, the die too soon, becoming ill, to live too long, all three of those benefits, we were actually able to pay out $1.9 billion. That's billion with a B, benefit money in 2015. So from January 1 to December 31, 2015, National Life Group paid out $1.9 billion in benefits. As well, we have almost 1 million people covered in our policies, and we want a full million. We are getting so close that it takes your help to get us there. So I'm going to show you how to really talk about National Life Group. And what I'm kind of going to start with is actually, again, the fact that our accelerated benefits are industry leading. It's a true story. In fact, our very first policy death claim came from an individual who, at the time, because National Life Group is 167 years old, so way, way, way back in the early days, our contract stated that if you went west of the Mississippi line, your contract was void. So if you passed away west of the Mississippi line, National Life Group was not on the hook and did not have to pay out a death claim. Well, lo and behold, with our luck, the very first person goes to California for the gold rush. And I actually happen to be myself sitting in California currently cheering on the Gold State Warriors. So I think it's kind of a tying story. But nonetheless, this individual goes to California for the gold rush, passes away. In his travels, he passes away. And at the time, of course, we could have told his widower, sorry, ma'am, we do not need to pay you this money. Well, that's not what we stand for. That's not what we've ever stood for, and it's not what we stand for today in 2016. So our founders went to every bank and every lender and any individual humanly possible at that time to gain that money to pay the widower. So we did. We got the money. We paid her grand total of, I think, $1,000 or $1,500. A lot of money back then. And the first thing that this woman did outside of paying her debts and stuff was to go to an artist to create ads. And these ads are actually used in history books, U.S. history books across the country. But she took out these ads in these newspapers in the Northeast Kingdom, up in that top corner of our country. And in that, they said, in plain language, these life insurance policies can be used for retirement money, emergency money, living benefits. These are all but the benefits you have with a policy from the National Life of Vermont. So in 1937, that was the year this ad was placed, we were already cultivating this industry-wide concept of living benefits, of using a life insurance policy while you are alive. So we're going to actually talk about how you can get your clients covered for the same revolutionary idea that somebody in 1937 had access to. So what we do at National Life, being that we have so much happening on one product, and actually this is on all of our products, but I'm gonna hone in on one today. But being that we have so much going on, we're trying to simplify it, right? You guys don't have 3 hours an appointment to dedicate to one single person. You need to be seeing people consistently, and you need to be on the go. And it's not simple to talk about life insurance, but how can we as a carrier really break this down to your level? So what we've done is we've created the puzzle piece, which is showing your client that when they have a policy with us, they have all three of the main financial consumer concerns of today covered. So what would happen if they died too soon, if they became ill, or if they lived too long? These are their concerns. These are the things that keep them up at night. And so they want to know that in any way, shape, or form, they are covered. So the first piece that we're going to talk about is becoming ill. That leading cause of death, actually one of the leading causes of death in America today, happens to be medical bills. So individuals who accidentally get injured or accidentally become sick, because no one tries to get sick on purpose, they end up in the hospital. They cannot work for long stages of time, but as well, not only are they out of work now, but they come home to $30, $40, $50, $100,000 medical bills that they can't afford, especially having to have left work. And probably in that time, they have not paid bills because they haven't been at work. And the debt just piles and it piles and it snowballs. And what we're offering here is the ability for somebody with triggering qualifying illnesses to receive their death benefit early, so that they can utilize it for those different bills and medical needs. So the first one I'm going to talk about today is terminal illness. So that's an illness that results in death within 24 months or less. So it's a 2-year qualification. Most competitors look at 12 months. We're giving a client 2 years to qualify. Once they qualify, we give them a lump sum distribution of their discounted death benefit. And once they qualify for that, those funds can be used for anything they'd like to use them for. And that's a big deal. Clients want to be able to use their money however and whenever possible. It is, after all, their money. So let's look at an example of that. We have a 45-year-old male, and today he purchases $500,000 of death benefit, so a $500,000 policy. And at age 65, our client is going to have a terminal illness. So he has gone into the doctor on a Monday, and the doctor has told him that given the results from his lab work, he has 15 months to live. National Life Group will then look at his death benefit and give him an offer. In this case, we gave $431,629. Okay? It's a pretty simple benefit. Once they qualify, they receive money. And I'm going to go into how this discounting works and why that money, that $500,000 and that $431,000, how they actually talk to each other. The second one is an accelerated benefit rider for chronic illness. So that's when your client is unable to perform 2 out of the 6 activities of daily living, or they become cognitively impaired. Cognitive impairment, of course, is when you have the short-term or long-term memory loss. And so that's a really big one for anybody who has Alzheimer's in their family or is concerned about that kind of impairment within their lives. But once the client qualifies, meaning that they cannot perform 2 out of the 6 activities of daily living, they receive a discounted death benefit, 2% of that death benefit over 50 months, 50. The one thing, or the couple of items that I want to bring up in reference to chronic illness are certainly the fact that it doesn't have to be permanent. We are not requiring a permanent chronic illness. So if your client today cannot perform 2 out of the 6 ADLs, but 2 years from now gets better or could get better, or they're anticipated to get better in 6 months, we won't deny them. They don't have to be permanently disabled or inable, for lack of, I'm sorry about that. But some of my competitors require permanent inability to perform these activities. as well. It's not long-term care, guys. That's what makes this so exciting. It is not long-term care. And I say that with enthusiasm because with long-term care, you have to be diagnosed by a specific doctor, be taken care of by specific nurses in very specific nursing homes. And oftentimes those are the worst homes on the block. When you have a chronic illness rider, you can be diagnosed by your family doctor, somebody you have seen for the past 50 years, 20 years, 30 years. You can be taken care of by your niece at home, by your son. You can live in your home for the rest of that time that you are unable to perform those activities. You can move to Malibu if you wanted, or heaven forbid, you want the fanciest home on the block. You can go out and you can grab that home as your own. And so again, we're talking about the excitement of this and this ability to be as flexible and use these for whatever purpose you need. So we're looking at our 45-year-old male. 20 years from now, he actually has a chronic illness. So we're going to offer him $7,338 a month for 50 months, 50. Again, this individual will use that money however he deems necessary, whatever it is that really stings to his heart at that time in his life. Our third accelerated benefit is actually critical illness. For those on the line who sell in California, this particular rider is still currently being approved here. So you actually have the left-hand side, just a regular critical illness, our traditional heart attack, stroke, cancer, end-stage renal failure, major organ transplant, Lou Gehrig's disease, and blindness. But for those who sell outside of California, you have access to these 6 additional triggers we just added to the rider. We're innovators, guys. We are constantly looking at how we can enhance, create, and just emphasize these riders. So for us, it was adding more triggers, which also included adding a fourth rider, which is the second concept of critical illness, which is critical injury. So now, instead of just talking about key illnesses, we're talking about key injuries. So if your client has a coma, paralysis, severe burn, or traumatic brain injury, they are covered. No other carrier has a rider like this, nor do they have one being filed presently. That's a really big deal. You are not only working with a reputable, long-standing company, you're working with a company that is miles, if not thousands of hundreds of miles ahead of the pack. Now, again, these came out in 2015, early 2015. And so California doesn't yet have the enhanced critical illness, so that previous slide on the right, nor does it currently have the critical injury. But it should happen in the third quarter, so look out for that news. But all other states have these riders. And just to stay consistent with talking about critical injury for just a second, think about your college athletes, right? Your high school athletes, those individuals who are going to work so hard at a young age to be the best they can possibly be. But what happens if they get injured? I have a brother, he's just 11 months older than me. He's almost 7 feet tall. Lucky for us, we got good genes. I myself am pretty tall for a woman. And he got very, very injured playing college basketball, and that was it. There was no NBA in his future. But can you imagine if he had a coma, if he had ever done something like that, smacked his head on the floor, just getting in the ruffle of getting a foul, and suddenly he can't go to school, and now he's got some sort of brain damage. We're looking at being able to pay those medical bills. Firefighters, police officers, those individuals have access. Military members. Guys, if you're in California, if you're in Texas, if you're along the East Coast, if you're anywhere where you can look at a serviceman or servicewoman and offer them the ability to be covered should they come home with a traumatic brain injury, you have just given them the most invaluable thing they could possibly pay for. That type of coverage just doesn't exist for our military members today. But when you look at a critical illness benefit or critical injury, it's actually based on severity. So anywhere from minor to life-threatening, as dictated by their doctor. So if your client has severe heart attacks, that is something their doctor has told them they have. We as financial professionals have no way of knowing what a minor heart attack versus a life-threatening heart attack is. That's purely up to the medical professional. So we're going to go back to our male who's 45, $500,000 death benefit. But instead of those other accelerated benefits, he's coming to ask for critical illness, because he has life-threatening heart attack just happened to him. So National Life Group is going to look at his policy and give him $409,000. So I'm going to sit here for just a second. I'm going to talk to you about these numbers again and how they actually talk to each other. So our client, let's call him Tim because we all know Mr. Sparkman. So Tim purchased a policy and it's this $500,000. So when he goes to accelerate it, National Life Group, and I'm going to keep these numbers more round. So National Life Group is going to say, okay, Tim, you bought $500,000, but you've only had the policy for 20 years. So technically, you still owe us about $100,000 in premium in the expenses associated to paying up that death benefit. So they're going to deduct those expenses still owed into that death benefit. Once they do that, they say, okay, after the deduction of the expenses, we can offer you $400,000. Again, I just want to keep this round, $400,000. If Tim accepts the full $400,000, then that's it. There's no policy left. He's taken all of the death benefit that we can offer him. So there is no residual $100,000 for a death benefit. He purely had his benefit paid out to him early, and it's as if he's passed away, and we have cut ties with him at this point. But let's say after his life-threatening heart attack, me as his insurance agent, I say, Tim, it would be nice to have $400,000. We would all love that, tax-free, amazing amount of money. But if you do that, the likelihood of you getting another life insurance policy is slim to none. Underwriting you now at 65 with a heart attack under your belt is going to be extremely difficult. So you would not be leaving your wife any death benefit. And Tim goes, you know what? You're right. I love my wife. I love my kids. I don't want to leave them in the dust. I only need half of that money anyway. $200,000 would be plenty of money to get my medical bills taken care of and catch me up on my mortgage. Perfect. National Life Group is going to write a check to Tim for $200,000, keeping $250,000 in force. So it's completely proportionate for him. He can take 1/3 and keep 3/3 in force. I just use half and half because I like round numbers. So the idea here for you guys is understanding that this is purely flexible benefit to your client, whether they use a lot of it, a little bit of it, or never use it at all. Because again, if our client doesn't need it for an accelerated benefit rider, that's okay. I would actually be much happier if Tim didn't have any accidental illnesses happen. What I'd rather him do is live too long. I'd rather never pay out to him an accelerated benefit, and I'd rather he take this policy and use the lifetime income benefit rider. This rider it's bar none. The only other carrier that has a rider like this is Minnesota Life. It's us and it's them. Two carriers in the entire industry with tax-free, guaranteed income for life. Tax-free, guaranteed income for life. That's what we're offering. And that's what we're really excited to make sure the clients have in their pocket. With this rider, there's actually no charge unless it's used. So if Tim never ever uses the rider, he never pays for it. But it's going to sit on that policy just in case he wants to use it. And when he calls me up at 65 years old and says, Brittany, I really want to use that guaranteed income, great. We'll turn it on. Once we turn it on, the benefit is guaranteed for life. So we'll ask National Life Group what your policy will be or what your benefit will be. And National Life will come back and say, Tim, we're going to offer you $40,000 a year. And Tim's going to say, perfect. Every single year for the rest of Tim's life, from age 65 to 100, we're optimistic here. Tim is going to live to be 100. From every single year, we will give him $40,000. Guaranteed. Never, ever, ever paying taxes on that money. And once he turns it on, once he says, yes, I want that money, there's no premium due because the policy is now in a lockup payment period where now we are just spitting money out at him. There can be no negative effect on these policies, though, okay? So once he's in that income phase with that guaranteed income, he really cannot be taking out loans or additional withdrawals. It is now just an income policy for him. He has to be between 60 and 85 to elect it, and the minimum waiting period, the policy has to be enforced for 10 years. And so there can be no outstanding loans. Again, this policy has to be completely full and intact when he goes to use this rider. So I want to talk to you guys about how the rider works. This chart is old, but I actually really love using it because it helps you understand what I'm talking about. How in the world can National Life Group guarantee tax-free money to somebody? I mean, we'd have to be working like in the black market or something, and we're not. We're doing this completely legal, completely by the book, I assure you. But what we're looking at is on this chart in particular, we've got a client, let's say it's Tim, Mr. Sparkman. He has his death benefit, which is level. He has his cash, which is growing. And below that, you see where he is making his premium payments. But now you start to see where he receives income. So when we first rolled out this rider, Mr. Sparkman would receive his income, let's say at 65, depleting his cash value and his death benefit simultaneously. So at the exact same time, both of those values are depleting, up until a threshold of $1,000 current cash, or $15,000 current benefit, death benefit. At that point in time, the rider would become taxable. So that's why you see tax-free to taxable. That's how the rider worked when we first rolled it out. But we are innovators. We are constantly changing and shifting to make sure we fit with the industry needs, what our clients need most. So what we did in 2014 is we actually changed it. So that threshold never happens anymore. At that point in time, previous to 2014, once it hit that threshold, the $1,000 current cash, $1,000 current death benefit, National Life would lock in the policy, and we would pay from our pocket to the client's hand. That's what creates a taxable event, guys, because now the policy is not even part of the equation. It's a locked-in policy sitting on a shelf, and we are paying them directly from our bank to their hand. And we said, who in the world wants that? Nobody wants to pay taxes. That's the point in these policies. So what we did was we changed the way the money moved. Instead, we watch this policy, we monitor it, and we start saying, you know what, Tim, you need more money in that policy to keep it tax-free and keep it going because you're still living, you're still alive, and you're still thriving. So we bonus his policy. We put our money into his policy, and his policy pays him. So we've, instead of shelving the policy and paying him directly, we've put it back into the equation. And I hope you guys are understanding what I'm saying by that. And if you're not, please reach out to the sales desk and ask them how this works. Ask them how they can get involved with these riders, or how you can get involved with these riders. So again, this is a tax-free level benefit. We also have the increasing option, which really just shows you in this chart, again, it's an older chart, but it shows you how the benefit's going to start out lower, and it's going to increase over time. And that's how the kind of clients are looking at it as being more of an inflation coverage, okay? So if you really compare these charts, you've got the level option being at a consistent $25,000 versus the increasing option, which starts at about just under $18,000 but works its way to $42,000. So now we have a client who is able to grow with that guaranteed money. And that is super, super exciting. So here we are, probably 10 minutes into our conversation, you and me, and I have told you how I will get you covered if you accidentally get ill. If you live too long, what will you do? I've got you covered on that too. Because no matter what, the $100 a month that you are giving National Life Group, that you're giving this policy, will get you one, two, if not all three of these benefits. And I'll tell you guys, I've given this presentation many, many times, oftentimes in front of large groups. And this is the moment right here where I will say, how many of you have just purchased this policy in your head? And I will put my salary on saying that 80% of that room will put their hands up. The 20% is skeptical. They still don't understand it. They still don't know which kind of product chassis, how much is it going to cost me, things like that. But 80% of the room fully understands the value in being covered for a medical illness, but they also understand the value of protecting their money today and getting guaranteed tax-free money down the road that they can't outlive. So when you've presented those two puzzle pieces in your own words, in your own language, you've sold a client without even talking about a product. You've talked about a reputable company that you know, that you understand, that you're now excited to work with. You've talked about these industry-leading writers. But now that their interest is piqued, right, they want to know how you're going to give this to them. And trust me, when you walk in there after Mr. Pack Life has sat down and given his whole ho-hum speech about market this and market that, and all of that information going over the client's head, you've hit them so hard where it counts, right in their heart, right in that heart of theirs, and then right up in their brain with that money. You now have them locked. You've got them locked in. And the best thing you can offer them now is the National Life Group LSW Flex Life. This product is top 3. There's 1, there is 2, and then there is the Flex Life product. And it's funny because the 1 and 2 don't even have the living benefits on them. They have one benefit, maybe 2. They don't have all 3, 4 if you include critical injury. They don't have that. They don't have guaranteed income on this product. Then why are they more heavily sold, you ask? Because they are known, reputable companies. They are largely branded companies. You're looking at Pacific Life, for example, as being one of those individuals. People buy it for the name. It's a name brand. It's not necessarily a better product. So here you are offering this amazing product with all these living benefits. And consumers today love the Indexed Universal Life. If you're not already selling IUL, goodness, you need to get in on that. That piece of action is exactly where this market is, and it's where it's going to stay for a while. So the Flex Life, people love because they love the upside potential, but the downside protection. Very, very consumer friendly. So a couple of things to know. It's issue ages 0 to 85. That means I am seeing this issued on anywhere from a 15-day-old child up to an 80-year-old business owner. I am seeing this policy, this single policy, written across any age spectrum you can bring to us. It has a minimum face amount of $100,000, and it has 6 interest crediting strategies, which we'll talk about in just a minute. All of the accelerated benefits, the lifetime income benefit rider, as well as other features that most carriers don't have as well. We have a systematic allocation. We can dollar cost average this rider. It's protected for 10 years, and we also add a bonus in the 11th year. And, you know, we're actually hoping to increase that bonus because the policy just does that well. We want to give the clients as much as we can back. We're mutual, guys. It's a big, big deal to be mutual. Interest crediting. This is what IULs are about. Indexed Universal Life is about the market. What makes an IUL so great and so consumer friendly is that your clients are not investing in the market versus a variable universal life, which imploded and everybody feels a bad taste in their mouth. This product means the client is not investing in the market, but they're with the market, right? I'm not laughing at you, I'm laughing with you. That's exactly what we're looking at here. Our clients are being able to just gain and grow with the market movement, but it's protected. There's a floor of 0. So if that market is -3, what is your client going to get? Are they going to lose all their money? Are they going to lose more money than they invested? Absolutely not. When that market goes up, the client's going to go up 4%, 5%, 10%. Oh, oops, the market's -3. It dropped dramatically. Wall Street didn't anticipate that. -3. Did my client lose everything? Absolutely not. They maintained. They're just coasting right along now. Just a little coast. That 0 is what saves them. That's what 0 is, our hero, and we're so excited about that when we talk to our consumers because they're not investing to lose, they're investing to gain. These policies, for those who have not worked with an Indexed Universal Life before and don't understand the actual movement of money, it starts with a basic strategy. So when Tim, my client Tim, pays his premium on June 1st of 2016, I can't just put that money in my pocket and go take my family out to dinner that night. National Life is going to take that money, and they can't do the same thing either. National Life Group is going to take that money, and it's going to sit in the basic strategy, earning 4% until the 21st of the month, because on the 21st of every single month, we sweep every single policy owner's policies into their index. Okay, so we can only do it once a month, but we have to take premium more times than one. So, Tim is going to pay his premium on June 1st. We're going to sweep it on the 21st. But from the 1st to the 21st, it's going to earn 4% because we want him to earn money. We never want his money just sitting around like a couch potato. We want it to gain as much money as possible. So after that 4% gain, that money is going to sit in its interest crediting strategy from June 21st of 2016 to June 21st of 2017. At that point, it will earn its interest rate, and that is how interest crediting works. There are 5 different strategies your client can use. I'm not going to talk about all of them. It's just not necessary even for you as an agent to talk about all of them. But if you really want to dive into it, right, you really want to know the nuts and the bolts of how these strategies work, I guarantee, first of all, that your consumer will be a little bit drowned in knowledge. They won't understand it. But if you need to get up to speed with it, I can't encourage you to call the sales desk enough. They run these products all day, every day, and they are as savvy as humanly possible. But what I want to talk about is strategy 1 and strategy 2, our cap focus and our participation focus. And I talk about those because those are the 2 most popular strategies. We can't recommend strategies at National Life Group, but we can tell you what the most popular is. What are the agents out there using already? What are the successful National Life representatives using? And guys, it is a 50-50 blend. Most agents today want their client to get a little bit extra cap and a little bit extra performance. And here's what I mean by that. On the cap strategy, which is strategy 1, the client can earn up to 12% on their money. That's it. The cap is high. It's a high 12% cap. And they participate 100%. So, for example, if the market does 6, then the client will be credited 6. That means they're credited 100% of the earnings. If the market does 15, we would want to credit the client 15 because that's 100%, but they're capped at 12. So we just cut them off right at that 12. We use the additional earnings to buy more options. It's not just going in the pocket of the company to buy a new jet ski. It's purely to then be back invested into our options for the client. So we give our client a little bit of that high cap. We like that. But what about when the market's down? Who wants 3%? You know, when you can get a little more. So we have a participation focused strategy, which is number 2. So if the market does 5, we can credit the policy 7 because the client is actually participating 140% into the performance. 140%. So they're getting a little bit extra for what the market's actually doing. Exciting, right? So agents out there, the savvy agents, want their clients to have the best of both worlds, and that's what they do. 50% of that premium is cap focused, 50% is participation focused. What makes this product, again, so universal and unique and just bending and twisting, again, Flex Life, the flexibility is through the riders. We have the accelerated benefit. We have an additional protection benefit, which allows you to dial down costs and increase the policy values by essentially blending it with term. It's not term, though, guys. This is permanent protection. But the idea is similar. It's the same concept as blending down, and so that's what we're offering here. We also have a balance sheet benefit rider. So it waives the surrender charges in the early years. Can you imagine looking at an illustration where there's no surrender charges? That's what that balance sheet benefit rider does. And that's really something you'll use for your affluent client, the individual that you are really getting competition with. If you just had State Farm walk in there and you've got to come in with more bang for the buck, here you go. You blend it down and you take away those surrender charges and boom, you give them the accelerated benefits with the guaranteed income, and you've just given them the most invaluable asset in their financial portfolio. We have, like I said, that lifetime income benefit, and you can also add other insureds to these policies. I mean, the benefits are just on and on. You can use this policy on a 15-day-old child. You can use it on a single mom of 4. You can use it for the most affluent business owner that you have in your town. All 3 of those individuals, you can use the same exact product for. It's mind-blowing. So I'm going to give you the life event story. And this is just going to take everything I said, that full puzzle, and it's really going to solidify it for you. It's not long, and it's not super hard. So let's dive into it. We are sitting down with Mark and Beth. Mark and Beth are our clients, and they've come to us because they know that they need financial protection in the event of death or illness, and that they want to use cash value. They already know they want an IUL. They've heard about this cash value growth, and they're so excited about the emergencies that they will be able to take care of in college and retirement. And they've sought us out for the idea of using this as kind of the be your own banker. And so we look at Mark and we say, we're going to give you $1 million, Mark, because you are the breadwinner. If something happens to you, we need you to be covered. Now, I know, guys, these are big numbers, $1 million, $950 a month. Not everybody is going to be able to do that. I know that. But the policy is exactly the same across the board, meaning that whether your client is putting in $950 a month or they're putting in $150 a month, they still have the same exact fluidity of their benefits. That's what's important here. The numbers are going to be different, but the use of them is exactly the same. So the first stage was protecting his family. So Beth now has $1 million if Mark passes away unexpectedly. And that money is going to grow. The cash value is going to start to grow tax deferred. But in our first step, in years 11 through 14, Mark and Beth are going to start pulling out tax-free withdrawals of $5,000 per year to help with their son's college expenses. Now, please note I said to help with. It's not going to pay off college completely, especially if the client's child is trying to go to Harvard or Berkeley or something, but it will help. It will help with books. It will help with an exchange program. It will help with room and board, one less loan, anything you can think of. To be $20,000 less in debt is still a big deal. But 20 years after that, Mark is diagnosed with multiple sclerosis. So he's going to use the accelerated benefit money, just a chunk of it, because remember, he doesn't have to accelerate all of it. He's just going to take 3 years worth of that money. And he is going to replace lost wages, because he's the breadwinner. No one's making money when he's not at work. He's also going to make home improvements so that he can accommodate this new illness of his. So he takes out $40,000 a year for 3 years. It's a lot of money. It's a ton of money, and he really needed that at that time in his life. But in that final stage, Mark is going to use his lifetime income benefit rider to take out tax-free guaranteed income for life to supplement his 401k, his Social Security, and his other annuity products. So he's getting an annual benefit of around $40,000 a year, guaranteed. Here's where it gets sad. Poor Mark has passed away. But when he passes away, we are still able to offer a benefit to Beth, and that is $646,000 of death benefit. So think about all of the things that we just did, and he still has $646,000 to use for those benefits. I mean, wow, guys, wow. That's just, again, invaluable to our client. They've only paid in $262,000 in premium, but they took out withdrawals for college, accelerated benefits for multiple sclerosis, the lifetime income benefit rider for retirement, and still had a death benefit. A total net benefit of almost $1.2 billion, or excuse me, million. I'm still in my billions here. Almost a total net benefit of $1.2 million. That's insane. That's the most ridiculous thing that I've ever heard of. Somebody putting in money just to take more out and use it in the time that they need it the absolute most. Tell me you don't have 5 clients you can go to right now. I mean, it's just there. But what's even better, again, you're with a company that stands behind you, understands what you do and what you need. And we're doing things like putting in these e-applications with the web illustrations. If you submit a paper app today, it's going to take, on average, 20 business days. 20. If you submit an e-application, it takes 4 days. And here's a little secret. Sometimes it takes as little as 15 minutes to get issued. 15 minutes. You can walk into that house. You can sell the National Life Group product. You can pull up your laptop and you can run that e-app, and you can probably have it issued before you leave their home, before they have forgot what you just sold them, while it's still right in their heart. And they're going to thank you profusely when you walk out that door. And even just to add to that, if you could put icing on that cake, you're going to get paid right after that. You are now in the next commission cycle to be paid. So you're not waiting 20 additional days. You are getting paid. I mean, come on. Your client's getting covered with these amazing benefits. You're getting paid so you can put food on your table. I just can't think of anything better. The perfect partnership. We have a mobile app which allows you to stay up to date with all of your cases, all of your commissions, and all of your incentives. So while you're sitting on the freeway or at the airport or waiting for your Starbucks, you can pull up the NLG mobile app. It's either on Google Play or the App Store, depending on your phone, and you can see and interact with your cases regularly. But maybe you're the text message type. We have text message notifications, which basically means if I want to know when my transfers are accepted, or when my policies have been issued, or when my commission is ready to pay me, National Life's going to tell me. I don't have to go looking for it. I'm going to get a text message that says, Brittany, we just issued Tim Sparkman's policy. Brittany, we just paid you on Tim Sparkman's policy. Great. No, I don't have to question anything. I don't have to take 5 minutes of my day or 20 minutes to call the home office. I can just jump right on and get those text messages sent directly to me. It doesn't get better than that. I've just sold this amazing policy with the most efficient system possible, and it's mind-blowing. And guys, I thank you for taking your time to sit with me today, because we just value everything that you do, and the fact that you have taken 45 minutes on your holiday, whether you are honoring your husband or a spouse of yours, or you are father yourself or grandfather, an uncle, anything. It's a big day for you, and it shows your dedication by sitting with me on the line today. So thank you all, and I hope that you have a fantastic weekend. And please give us a call, 800-906-3310, option 1. We'll get you right to the sales desk, and it will get you right in touch with the individuals who would be more than happy to run you an illustration on a product like this. So again, thank you, and please enjoy the rest of your weekend.
Thanks, Brittany. I think Tim's getting back on. Give it a second.
Okay.
Sorry, guys. I think Tim's having a trouble getting back on. We appreciate you being on here tonight, Brittany. It's good to have somebody in the company that's so closely contacted with our company and can help us. And we appreciate all you guys do for us and logging in and giving us your expertise on your company.
Of course. Thank you guys for having me. I really appreciate it.
Thank you. And Brittany will be with us at the convention, I believe, in July, so we'll get to see her.
I will.
You guys can pick her brain. Yes. But doesn't look like Tim's going to be able to get back on, but you guys just, they'll be in touch with you this week. We've got the other call on Thursday. Don't forget, if you haven't signed up for our convention, it's in July. You can find the link on the website, and the rooms are going quick. So if you haven't booked your room yet, get on there and book that too. The link's on there as well on the MVITA website. So I think we're going to sign off now. Thanks, guys. Have a good night, and happy Father's Day to all the guys out there.